Hey friends, welcome to Enoch's MBA. Today we are going to study Chapter 1 Introduction to Accounting of subject Accounting for Managers. After watching this video, you will be able to know the evolution of accounting, to understand the meaning of bookkeeping, and to understand the meaning and definition of accounting. So let's start the video with the introduction of accounting. Accounting is a system meant for measuring business activities, processing of information into reports, and making the findings available to decision makers. The documents which communicate these findings about the performance of an organization in monetary terms are called financial statements. Accounting is aptly called the language of business. This designation is applied to accounting because it is the method of communicating business information. The basic function of any language is to serve as a means of communication. Accounting duly serves this function. The task of learning accounting is essentially the same as the task of learning a new language. But the acceleration of change in business organization has contributed to increase the complexities in this language. Like other languages, it is undergoing continuous change in an attempt to discover better means of communications. To enable the accounting language to convey the same meaning to all stakeholders, it should be made standard. To make it a standard language, certain accounting principles, concepts, and standards have been developed over a period of time. This video dwells upon the different dimensions of accounting, accounting concepts, accounting principles, and the accounting standards. More formally, accounting is described as the information system that measures business activities, processes the information into reports, and communicates the results to decision makers. You can also think of it as the scorecard of business. Evolution of accounting. How the accounting get evolved over a period of time. Accounting is as old as money itself. It has evolved as like medicine, law, and most other fields of human activity in response to the social and economic need of society. People in all civilizations have maintained various types of records of business activities. Some of the earliest known writing discovered by archaeologists are accounts of ancient tax records on clay tablets from Egypt and Mesopotamia dating back as early as 3300 to 2000 BC. The oldest known are clay tablet record of the payment of wages in Babylonia around 600 BC. Historians hypothesize that the primary reason for the development of writing system came out of a need to record trade and business transactions. Accounting was practiced in India 24 centuries ago, as is clear from Kautilya's book Arthashastra, which clearly indicates the existence and need of proper accounting and audit. Complete accounting system for an enterprise, which came to be called as double entry system, was developed in Italy in the 15th century. The first known description of the system was published there in 1494 by a Franciscan monk by the name Luca Pacioli. The expanded business operations initiated by the Industry Revolution required increasingly large amount of money, which in turn resulted in the development of the corporation form of organizations. As corporations became larger, an increasing number of individuals and institutions looked into accountants to provide economic information about these enterprises. Thus, accounting began to expand its function of meeting the need of relatively few owners to a public role of meeting the needs of a variety of interested parties. The first professional organization for accounting was established in Scotland in 1854, starting with the Edinburgh Society of Accountants and the Glasgow Institute of Accountants and Actuaries. The organizations were each granted a royal charter. Members of such organizations could call themselves chartered accountants. As companies proliferated, the demand for reliable accountancy shot up, and the profession rapidly became an integral part of the business and financial system. Organizations for chartered accountants now have been formed all over the world. In the US, the American Institute of Certified Public Accountants was established in 1887. In India, ICAI, the Institute of Chartered Accountants of India, was established in 1949 as a statutory body under the Chartered Accountants Act 1949, enacted by the Parliament for regulating the profession of chartered accountancy in India. The Institute of Chartered Accountants of India ICAI is the world's second largest professional accounting body and largest professional accounting body of India under the ownership of Ministry of Corporate Affairs, Government of India. Meaning of bookkeeping and accounting. Some people take both the terms bookkeeping and accountancy as synonymous terms. Both the terms are different from each other. However, there is no universally accepted line of demarcation for division between the two. Bookkeeping is the art of recording business transactions in a set of books of accounts. Transactions means any dealing expressed in terms of money. The books in which the transactions are recorded are called books of accounts. Bookkeeping is concerned with preparation of vouchers, recording transactions in a journal, and posting in a ledger. Anyone who has basic knowledge of the principles of bookkeeping can maintain the books of accounts. On the other hand, accountancy requires deep knowledge of the principles and their applications. Bookkeeping and accounting are not synonymous terms. The job of an accountant commences where the work of a bookkeeper ends. Accountant guides a bookkeeper and reviews the job done by him. Normally, a bookkeeper works under the supervision of an accountant. An accountant is required to have much higher skills and knowledge compared to a bookkeeper. The larger the firm, higher is the responsibility of an accountant. Definition and explanation of accounting. The American Institute of Certified Public Accountants, which has played a novel role in the development of accounting, defines the concept accounting as follows. Accounting is the art of recording, classifying, and summarizing in significant manner in terms of money, transactions, and events which are in part at least of a financial character, and interpreting results thereof. This definition is the most acceptable one because it encompasses all the functions which the modern accounting system performs. If we break this definition for better understanding, we find the term accounting contains different components like recording. Recording is the basic function of accounting. Events and transactions which are of financial character, either fully or partly, are recorded in an orderly manner in books of accounts. The transactions are recorded in a journal as and when they happen occur. Journal is further subdivided into cash journals for recording cash transactions, purchases journal for recording credit purchases, and sales journal for recording credit sales. All these books are called subsidiary books. If subsidiary books are maintained, the transactions are not recorded in the journal and are recorded in these books directly. Only those transactions that do not find a place in subsidiary books are recorded in the journal. Next term is classifying. All similar transactions are grouped and posted in one book, which is called a ledger. The objective of classification is to find a summary of the entries of same nature at one place. This book, ledger, contains different nature of accounts. For example, there may be separate heads of accounts such as salaries, traveling expenses, repairs, printing and stationery, etc. We are interested to know the total amount under each head of accounting for our understanding and control. Next term is summarizing. When posting is complete in the ledger, totals are made for debit and credit side in each head of accounts and final balance, be it debit or credit, is arrived. The individual accounts find a place in a summarized manner, which is called trial balance. Income statement, trading and profit and loss account, and balance sheet are prepared from the trial balance. Next term is financial character. Accounting deals with financial transactions. Accounting transactions which are of financial character only are recorded in books of accounts. In other words, if a transaction cannot be expressed in terms of money, they are not recorded for accounting books. Analysis and interprets. Analysis refers to methodical classification of data. If unconnected data are grouped together, understanding is not possible. All assets belonging to current assets are to be grouped together. Similarly, all current liabilities. If current assets and current liabilities are mixed together, data would be confusing. Interpretation means drawing conclusions from the data and explaining the conclusion in a simple language, easy to understand, and plan further course of action. Analysis and interpretation are complementary to each other. Interpretation is not possible without analysis. Analysis is of no use unless followed by interpretation. Communicates. Communication is the final product of accounting. Financial statements, that is, profit and loss accounts and balance sheet, are the means of communication. Financial statements are vital as they are public documents, available for everyone to read if the firm is a joint stock company. Thanks for watching. If you like this video, please hit the like button. If you want to see more videos, hit the subscribe button. If you have something to say, please leave a comment. And if you want to read this chapter, please log on to www.enotsmba.com. Thank you.